So how does leverage buyouts create returns? So remember that in a leverage buyout, in order to make returns, the enterprise value must increase. Largely speaking, there are two ways that we can increase enterprise value. Number one, the actual EBITDA itself, so the actual business itself can grow. That's one way to increase enterprise value. Number two, even if the EBITDA is same or the profits are the same, if the purchase multiples increase over time, the private equity will be able to sell the company for a higher enterprise value, which is unlikely but possible. So business growth and exit multiple growth are two ways to increase enterprise value and make returns. So this is fairly obvious. And also, as we've seen before, the private equity deals make returns by capital structure enhancement. Let's see the diagram on the right. So we have, upon entry, we have an enterprise value of 200. The company raised 100 debt and contributed $100 worth of equity. Even if the enterprise value stays the same, if we repay debt worth $60 by running this company, the private equity is able to make returns because we've invested 100, but we ended with 160, so that's a 60% profit. But even the better case comes when there is an expansion in EBITDA or multiples. So let's assume that EBITDA increased twice than before. So as a result, assuming the same multiple, enterprise value doubled. Even if we assume that we didn't repay any of the debt, since debt stays the same and the remainder is all the equity's stakes, 150 becomes our portion. So in this case, we've contributed only $50 worth of equity, but the return is $150 worth of equity. So it's almost a 3-time investment profit. Same goes for multiple expansions as well. If we assume a multiple expansion of 2 times, and if the enterprise value becomes twice bigger, we can witness a huge profit from the private equity's perspective. So in reality, the private equity aims returns from all 3 of these means, or at least 2. Capital structures are they're designed by the private equity itself, so this is pretty much what they aim constantly. And EBITDA expansion also, because obviously you want to invest in companies with very high potentials of EBITDA expansion. So these two are usually what the private equities are aiming for. And if they can, maybe they try to enter the deal in the lowest multiple as possible and aim for a multiple expansion as well. So that's how leverage buyouts create value, and we're going to build a mini leverage buyout model and try to see how this mechanically works in Excel.